Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
For those of you looking to quantify and understand all of the benefits of open banking, you've come to the right place. In this Pulse of Payments episode, I speak with Trustly VP of Enterprise Growth, Ross McFerrin, a self-proclaimed payments geek, admittedly obsessed with innovation and disruption within our payments ecosystem. Open banking, by definition, is the use of open APIs that enable developers to build applications and services around financial institutions. So, what do companies like Trustly provide in the way of innovation and disruption? Simply stated, they make ACH a viable method of payment within the digital commerce space. And this is a big win for merchants because it offers them a payment alternative to card that is less risky and more cost-effective. In the e-commerce space, Trustly thrives as an alternative to card because they can guarantee payments with no chargebacks and at a cost much lower. When it comes to travel, merchants appreciate the level of security and confidence experienced on both sides of the transaction. And in the fintech space, they also benefit from open banking options that help facilitate various offerings, including NACHA compliance, loan underwriting, RTP disbursements, and more. But truly, Trustly offers benefits on both sides of the payments equation. Merchants realize material savings from a payment standpoint, have the capacity to deliver a payments experience that resonates well with the younger generation, and can even benefit from future-proofing their business as real-time rails become more common. Consumers, on the other hand, can receive more benefit-driven incentives offered by the merchants they choose to transact with. Tune in during February and get the pulse on all things open banking. How is it shaping our industry, and what do we have to look forward to in the very near future? You'll learn all of that and more during our Pulse of Payments series focused on open banking. Hi, Ross. Thank you for being here, and welcome to the Leaders in Payments podcast, and more specifically, this special episode about the Pulse of Payments, where we're going to be doing a deep dive on open banking. So, Ross, thanks for being here.
Greg, thanks for having me.
Absolutely. So let's dive right in. If you don't mind, tell our audience a little bit about your background and your role today at Trustly.
Sure. So I'm a payments geek, and I've spent my career in the payment industry, and I've always had an obsession with innovation and disruption in the space. I've spent a bulk of my career with a focus on delivering alternative payment methods and disbursement solutions to the market. I joined Trustly a little over 2 years ago, and I'm responsible for driving enterprise strategy and growth for our Americas business, really with a mission to make Trustly a household name, which rivals the card networks and PayPal.
Okay. Well, let's talk about Trustly. So tell our audience what Trustly does.
Yeah. Trustly makes it easy for our users to make payments with their bank account and for our clients or merchants to receive those payments. So for the consumer, it's a simple, safe, and secure way to pay. For the merchant, it's a low risk, low cost payment alternative, which leverages bank payment rails. So said simply, we've made ACH a viable method of payment in digital commerce. When you look a level deeper, you can see that there's a lot more to it than that. And over the last several years, our team has established API integrations with financial institutions across North America and Europe. Through those integrations, we have the ability to provide a number of solutions and address a variety of use cases for our partners to help mitigate risk, decrease costs, automate processes, acquire new customers, introduce speed into the settlement flow, and a lot more.
Okay. And it's an international company, right?
We are in the U.S., based out of the Bay Area, and then globally headquartered out of Stockholm, Sweden.
Okay. And it came to the U.S. a couple of years ago, 2019, I believe?
2019 was the merger between our U.S. entity and our European entity. So the name Trustly stuck at the group level, but our U.S. entity had formerly been known as Pay With My Bank. So that merger closed in, I believe, June of 2019, and we've been Trustly ever since.
Okay, so it truly is a global solution.
It is a global solution, and our U.S. platform is our global platform. So as merchants and clients are looking to leverage open banking and looking to leverage the capabilities that we deliver to the market, that U.S. multinational who's either expanding or has already expanded into Europe can do so through a single integration with us.
Okay. And you mentioned the word open banking. So let's dive into that. Let's talk about the definition. So what do you or how do you define open banking?
Sure. So open banking is the use of open APIs, which enable developers to build applications and services around the financial institution. It allows for new features or services to be offered to a user, which might not be offered by the financial institution itself. Maybe a good example of that would be an app powered by the data received from financial institutions to help consumers track their spending, save money, reach financial goals, earn rewards. I would say, though, that the term open banking itself is used somewhat loosely around the use of data that's sourced from financial institutions. And in Europe, the concept of open banking is far more structured. There's regulation around it and a requirement or a mandate on banks to deliver and develop those APIs. And that's PSD2 in Europe. It's far from stable and far from being mature. And then when you look at other markets like the US and Canada, we're just beginning to see some of that formality take shape. So last year, the Biden administration put an executive order in place, which establishes some of that foundation needed for regulated open banking to be built upon. And some of the larger banks here in the US have taken it upon themselves to build out their own open banking data access APIs. But it's going to be a very long time before we can expect to see PSD2 level focus put on the infrastructure here in the US.
Okay. So maybe walk us through sort of a real life example. I'm a consumer. I go to a merchant's, let's say, website. What do I see and what do I have to do to sort of make all this work?
Open banking, or rather the way that this is typically deployed on a merchant site, on a fintech app, the end user is authenticating themselves by logging into their bank with their bank username and password. And in doing so is providing Trustly or a fintech or a merchant with permissioned access to retrieve certain information from their bank account. So in Europe, again, that's all being delivered through very structured APIs as developed by each bank. And then there are certain permissions and timeframes that data is then accessible by the receiver of the data. Here in the US, we're doing that for merchants in marketplace. We're doing it for large social media sites. We are supporting large billers, large lenders, gaming operators, travel merchants as well, and providing them with not only the ability to retrieve data, but then take it a step further and actually provide solutions on the payment front as well.
Okay. And you mentioned some of those verticals. So I did want to dive deeper into a couple of them. Let's talk about e-commerce, travel, and fintech. So let's just start with e-commerce. What makes it unique or why does the Trustly solution make sense for an e-commerce merchant?
Sure. And actually, you'll notice a trend as we speak about these verticals. For e-com, Trustly really thrives as an alternative to card. We guarantee the payments that we process, meaning no chargebacks to the merchant, and we do so at a cost that's well below card. We address multiple use cases beyond payments for e-com merchants as well. So if you think about the marketplace model, we can not only help the marketplace realize tremendous efficiencies on the acceptance front, but we can also help them eliminate risks on the seller side by providing a secure way to confirm that marketplace seller is in fact the owner of the bank account that they're associating with their seller profile. And for that same seller, perhaps they're needing to increase their office size or invest in their infrastructure in order to sell more through that marketplace. And they're seeking working capital. They're seeking financing. That marketplace could leverage Trustly and the access that we have to data for the information needed in order to properly assess the financial risk associated with it, extending that working capital. And then finally, Trustly can provide the rails in which to pay those funds out to the seller and do so in real time. So we can really, from an e-com and marketplace specific standpoint, provide a really comprehensive solution.
Okay. And those solutions that are, say, non-payment related, is that still done via like a transaction fee or is it more of a SaaS model?
So the way that our commercial structure looks to a client, we're taking on the risk of a payment. And in doing so, we're introducing a pricing model that looks similar to interchange. We introduce a variable rate and a fixed transaction fee, but the combination of the two to the end merchant is still materially less than the cost of card. Now, on the other side, where we are helping in the onboarding event of a marketplace seller or providing the financial means or insights into that user's financial status, those are transactional based. It'll be a fixed transaction fee that the merchant is taking on in order to access that information.
Okay. All right. Well, let's talk about travel a little bit. I mean, being in the payment space, I think a lot of the listeners will understand taking payments in the travel space is unique in and of itself. So talk about why open banking or the Trustly solution is valuable for the travel vertical.
The opportunities and use cases are really interesting in travel, in part because you've got some B2B payment flows where we can bring a lot of efficiencies. Think about the travel agent to airline payments that take place today. But then you also think about models like the vacation rental sites, Airbnb, VRBO. We can start with payment acceptance, where we deliver material impact to that merchant's bottom line. We give the consumer an easy way to book and pay for their reservation with their bank account. In doing so, are providing a material savings to the merchant. We then give the merchant a far lower cost method of payment, and in turn, perhaps the merchant shares in some of those savings back to the consumer. You book a vacation rental for 5 nights and it may cost you $1,000. That transaction processed with a card might cost the merchant $30. But with Trustly, we could be a fraction of that. So some of those savings could be put into a rewards program for the traveler. It could even fund benefits that are offered by the host. In travel and in this use case as well, we could support the onboarding and underwriting of that host who wishes to list their properties onto the facilitation of real-time payouts to the host when those stays are complete. The open banking value brought to the table in this scenario is really the assurance that the host is in fact the owner of the bank account that they're associating with their profile. And then also that routing and account number is a good account to then disperse those funds to.
Okay. And does the consumer see the Trustly logo, or is it ever white labeled? How does that work?
Trustly is becoming more and more of a consumer-facing brand, and you'll see more of Trustly on merchant sites as we are deployed here in the US and Canada and in Europe. It's very important for transparency, as the end user needs to know that it's not the merchant who's accessing their information, nor is it the merchant who's established a connection with their bank, but it's Trustly. That then brings a trust factor to the table and makes it more clear that this is a service that's being provided by Trustly. Their sensitive information, like their bank username and password, are not visible to the merchant, and that their information is not being shared with third parties. When the end user is using Trustly, logging into their account, either for associating their bank account with a marketplace seller profile or for the purpose of making a purchase, that interaction is for the sole purpose of that user's relationship with the merchant. We aren't aggregating their information. We're not selling it to third parties. And that matters a lot.
And I would assume during the process, there's disclosures that come up that say all of that.
Yeah. Yep. There sure are.
Okay. All right. Well, let's talk about the fintech space. I mean, obviously, that's a very broad segment. It covers a lot of different and unique solutions. So where does Trustly fit in working with fintechs?
You're right. It's incredibly broad, and the use cases are even broader than that. Today, we're supporting fintechs. We're supporting billers, financial services companies for very basic use cases like complying with NACHA web debit account validation rule requirements, to the tokenization and securing of their database, all the way through to funding crypto wallets, to underwriting loans, to completing disbursements over the RTP rails. We really offer a very comprehensive set of solutions into the fintech and financial services space. And it's a space where consumers are also very aware and familiar with the end user experience as well. So we're seeing not only a strong performance with our product, but also very strong adoption by the end user.
Okay. And maybe this is a basic question, but I'm trying to dig in to make sure that everyone understands sort of the solution. So what does the financial institution, what is their role? So if I'm a Chase customer or a B of A or any of those other financial institutions or even small community banks, what role do they play? I mean, do you guys have to have a relationship with them or how does that work?
So with financial institutions, only 10 or so in the US have published their own data access APIs. And in those cases, we are putting direct contractual relationships in place with the bank in order to retrieve data that they are making available to us. With the others, over the last several years, our engineers have been establishing API integrations with banks without the need for the bank to put anything in place with Trustly. And we're doing so without any screen scraping, without sourcing any information from third parties, which allows for us to retrieve information in a real-time manner and in a way that doesn't chew up a bank's bandwidth. As we review what we do with financial institutions, rather than be met with resistance like others in the market have felt, instead we're experiencing whitelisting and an openness to collaborate by those financial institutions, which is really energizing.
That's cool. So what advantage do companies have to integrate Trustly's solution now as opposed to waiting? I guess said another way, what is the early mover advantage for you guys right now?
Sure. So keeping the scope on the US, companies integrating Trustly today have the opportunity to realize material savings from a payment acceptance standpoint. They can deliver a user experience that resonates well with millennial and Gen Z consumers, while also future-proofing their business as real-time payment rails become more available and ubiquitous. Trustly is going to be piloting a RTP, request for payment, or RFP solution later this year, which introduces an experience which doesn't require the payer to wait for their bank mobile app to send them a push notification with the payment request. Instead, the payer, while they're there on the biller side or on the merchant side, Trustly is containing that experience end to end within our interface, helping to greatly increase conversion, which is something that is a major concern when you look at the way that RTP, RFP is being propagated by banks. We'll look to do the same with FedNow so that as FedNow and RTP become more adopted by financial institutions, we'll then be able to intelligently route transactions over either ACH, RTP, or FedNow rails, depending on the availability and the risk profile of the transaction, while also factoring in payment rail costs and the end user experience. Obviously, the introduction of any friction into the payment is top of mind for merchants, and it is for Trustly as well. So with Trustly, merchants need not create their own strategy around how to utilize open banking infrastructure, how to develop to banks data access APIs, and also how to leverage the availability of real-time rails. We're doing all of that heavy lifting. We're optimizing and really creating all of that infrastructure for them, and we're doing it at scale.
Okay. We've taken a pretty merchant-centric view of open banking so far, right, by talking about the verticals and how it works. So I'm curious, what's your opinion on the consumer benefits? What are the consumer benefits?
So open banking has the potential to introduce value to the consumer that isn't otherwise afforded by the merchant due to the cost of acceptance. So this is just one example, but let's take the grocery industry. This is one of the thinnest margin industries out there. And you've even seen major grocers make their challenges with the card associations very public. In addition, you've got other payment trends occurring in the market where consumers are gravitating toward buy now, pay later payment solutions, which are incredibly expensive. If that grocer is already challenged with interchange, it'll be very difficult for them to justify the very high cost of buy now, pay later. But with open banking, coupled with Trustly's strong risk models and our ability to guarantee payments, we can unlock that consumer value and extend a buy now, pay later solution to that consumer and to the grocery merchant who wouldn't have otherwise been able to afford that. Ultimately giving the grocery customer the ability to buy their groceries today and wait until, let's say, next payday or break their payment up into chunks. And we're doing so at a cost that's still below card.
You mentioned a word that I think is important in the payment space, no matter sort of what part of it you're participating in, and that's the word friction. So, do you feel as though just over time consumers will get used to being like putting in their bank credentials and feeling comfortable? Do you feel there's any friction there? And if so, maybe what has Europe done to learn from that, and that you guys have taken that learning and brought it here? Not saying there is friction, but maybe there's perceived friction. So can you speak to that?
Yeah, I would start with the European market is very different. You've got strong consumer preference for local payment methods in Europe that don't exist here. And you've also got a lot greater adoption for the credentialed payment flow in Europe, especially in markets like Sweden, Norway, Finland, Denmark, Netherlands, Germany. So you've got that foundation, which was already there, and then made more available through the introduction of PSD2 PIS APIs. That has created only an acceleration in adoption in Europe for payment with a bank account over open banking APIs. In the US, I would say it's still relatively early. However, we're seeing incredible adoption across the different use cases that we brought to market. And I would say that depending on the industry, you're going to see incredibly strong adoption if the consumer motivation is high. Let's say this is a consumer who's owed money. If presented a login flow for the purpose of receiving money, you're going to have incredibly high conversion rates. We work very closely with merchants in designing and introducing value to consumers as well, which is helping to drive adoption in a pretty big way. And I think as you also follow the merchants, the billers, and the clients who are utilizing Trustly and other solutions like it, it's making that consumer experience a far more normal user experience and almost becoming an expectation from consumers.
Okay. And last question, where do you see the payments industry, or more specifically open banking, heading, say, in the next 2 to 3 years?
In the US, we should see an acceleration around open banking. And as I mentioned already, we've got a handful of banks who have published their own data access APIs and are creating their own framework to support open banking. But we are still so far away from that being the standard in the US. We've got thousands of financial institutions here, many of which don't have the resources to publish their own APIs. So what I think you're going to see is you'll have some companies who will be building out those APIs on the bank's behalf. And I think more importantly, it's how those banks are adopting instant payment rails and how the merchants and billers are thinking about instant payment rails in combination with open banking APIs as they become available. What I've noticed over the last couple of years is there's incredibly high interest from the market in instant payments, but there's also the resistance by banks to actually make those available and integrate to the clearinghouse APIs that they need to do in order to deliver those payment options. So I think you're going to see more traction there. I think you're going to see more adoption given the strong interest from merchants, the strong interest from billers and fintechs around instant payment rails.
Sure. So, Ross, we've covered a lot of ground, talked a little bit about you and your background and your role there, and then obviously about Trustly and open banking in general. So is there anything else you'd like to add before we wrap up?
I would just add that the next few years are going to be really fun to watch. There's so much attention being given to open banking, so much attention being given to real-time payment rails. This is going to be absolutely an evolving space, still so immature here in the US and globally, but can't wait to see what the future holds as Trustly innovates around all of this and delivers solutions that benefit both merchants and consumers.
Okay. Well, Ross, thank you so much for being on the show today. I know your time's very valuable, so I appreciate you being here. So thank you so much for being on the show.
Greg, appreciate you having me.
Absolutely. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.